What's going on, YouTubes? Time for recap. FOMC. I was not able to get here for the trading, but by the looks of it, man, she was a little awkward today. A lot of popbacks, but we hit targets. So some of the expresses there, 600 bones across the way after another payout today. So what was the initial today for our crew? Now, you know me, I like to put on my over-under prior days. Let's delete these algos, delete the other ones. This is what we're looking at today for ours, for our group, for our class. And the biggest takeaway for me today, and I posted in chat way before, I said don't even bother with the FOMC chop after hours or even throughout the day. It's going to be very static. It's going to be slow grind and big washes, and unfortunately, that's what happened. Gap fill daily, and that was the main plan for today. As you see these big channels on QQQ and SPY, that is the daily gap we talked about in the last couple of videos as well. So we assumed, like we said on the last YouTube video, I'll throw it in the YouTube description if you want to check it out, that we were coming down for the gap fill and the 10 SMA daily for the bounce. If you watched that last video, this is exactly what we predicted yesterday for one of the scenarios. So as we move into that bounce, the only thing I wanted to see was, like we said yesterday, push into the gap, does not fill first day, second day fills. Now, again, we touched on that last video on why that happened. Now, very easy and quick trade plan for today because it was literally FOMC day. When you come into FOMC, you generally have a very static, low floating day. You don't get a lot of follow through either or. So even if you were looking at some of these futures trades overnight here, you had this monstrous pop up, right at the open, and then we just fibbed this out. That was all we did. So I took the 5-minute high low of that monster pop after hours, and I said, well, we're going to go come down to that 50 eventually. We just got to stay inside the candle, right? So what I did is I took the 5-minute high low. So I'll adjust this real quick because we're on the 1 minute, like so. Oh, we went too high. Wrong bead. There we go. So 5-minute high-low at the open. Now, for me, when it puts in a pretty parabolic, crazy candle like that, we look for over under the 100, right? So you see me do this all the time in the live where something pops back up and then I'll end up like shorting the secondary candle to come back into the zone. That one was a little too high paced on the 1 minute to do so. I warned my chat as well about fake structure breaks and don't get squeezed out. So even so, in our Discord, in our members, I noted even before this 10 SMA catch up was happening that this big pop up candle was going to be very dangerous for short structure break reversal. So what I mean by that is get to the short side, even when structure breaks. So if it comes down to that lower low like it did right here, I said, please ignore that. You're not going to, you're not going to get that nice structure break to the low side. Usually you look for a structure break on trend where something hits a high, hits low, lower low right here, right? And then pops back up to potentially continue trend down. I noted in our Discord, said, no, be very, very careful with that high pace open because we're probably going to shoot back up, and then we need actual trend dominancy, and I'm real big on the VWAP, and everybody knows this in our chat, but very big trend dominancy on VWAP, and then we do use the standard deviation 2s above and below. Orange is resistance, blue is support. So until that price action reflected under volume weighted average price, that was the only time we're getting back to the golden pocket, right? So the giant 5-minute candle, you fib out high-low, and you wait for this beautiful lower high from highs, right? This structure break was all fake, as we called in Discord, pops back up to that 100 one more time. So imagine going short down here on some of these structure breaks, you're shorting a lower high, and then you get pushed all the way out 11, 12 points. I mean, after hours, not the biggest deal, but it's there. If we bring up the oscillation indicators, this is another really big takeaway here for you guys, to watch for confirmation of trend. I use the 50 RSI like a price level, right? Well, I guess it is a price level, but I use it as a 50 waypoint, we should say. So anything between the 50 and the 70 is uptrend. Anything at the 50 and 30 is downtrend, right? We have videos on this if you want to check out the indicators we use and how we use them. That also would have saved you a headache to try to short this monster candle up, okay? If you notice, the RSI didn't start giving you that break right here till about, 20:30, but 2 hours after open. So we're looking at like 7, 8 p.m. here. Well, maybe 9 p.m. as it came into the full break for a downside. And it didn't get to that RSI lower channel till literally after that. The MACD as well, getting a little, I think my fat head's in the way for that one. the MACD as well, giving you a little bit of some false signals here. And again, when we have a parabolic candle like that, technical analysis, regular trading, regular patterns, we kind of chuck out the window and we wait for later confirmation. Use the VWAP or moving averages. As you see here, the MACD was signaling lower high and crosses and all bearishness since 5:30, right? And we didn't get that. We got a giant pop at 12 points, back up to a lower high, and then it came down and hit the GP. Now, with this after hours trade, one thing did stick out to us, and we shied it for the 50. So this was the trade that we took in the pre-market and after hours here coming into the day. So I was up at about 4:30 a.m. watching this area here, and I noticed the 50 shy. So we're still on that 5-minute candle, which we have a high and a low range of. The 50 is the most important piece of the golden pocket. So when we seen price action finally break the VWAP, we got a 100 EMA in the green action, back test the VWAP, as we are confirmation traders, we're always looking for that, and then headed down, we got a shy. Well, if you look real close, one thing did stop the price action before hitting the 50 fib, and that is the 200 SMA. That is the peach line right here. That is the 5-minute 200. So that's a good thing, because that sets us up for a better short magnet later, because this comes down, hits the 200, doesn't hit the 50, pushes back towards the liquidity sweep, right? So we call these fresh high, fresh low scams. We see these all the time, where in deep consolidation, you will see a fresh low and then it'll pop back at you. And then you'll see a fresh high and then it'll pop back at you. And they go for stop orders. Like if you are a shorter and you put a single short in or whatever you're putting in, and you put a stop loss up here at equal highs, they always send candles up to get people that use equal high and equal low stop outs. That's just how it is. It's just it's a grab, right, for your stop. And they usually get them for the novice traders. We understand fresh low, fresh high scams pretty well. So when we did see it shy the 50 fresh high scam, I knew that, well, we're going to have a magnet to the downside eventually. So I was saying in chat, well, we're either going to come back up to the 1 minute gap, because we did have a pretty big gap here on ES. Open for the day, which again we did fill, but only in FOMC panic. It was way up here. There's your FOMC panic, right? And then was going to come down for that 50. So we did start the gap here, and I said, well, it's probably going to magnet down, because best case scenario, what are algos programmed to do? Well, screw over everybody, right? So if it created a big gap like this, and that's a big gap, that's a multi-tick gap, multi-cent gap rather. And that's a pretty big deal when that's left open. So when it created and it got back under the VWAP and started coming to downside, I'm like, yeah, it'll probably magnet down to that 50 before, coming back up and filling it. It might even be FOMC. And of course, it was FOMC pretty much end of the day here before that gap was even filled late day. And these big old FOMC days, I tend to stay away from if I can. I play some of the bigger accounts, which are fine, but it's usually trouble, especially for the small accounts. So last little look here on SPY. I did want to bring up here that our targets were labeled for today, and it says gap fill target if FOMC sends us down under golden pocket. Okay, so that was the whole trade plan for the day. I told my whole crew in Discord, I said, guys, this is it. We put this on the screen. We stared at nothing sandwiches until 10 a.m. and I had a meeting and I had to get out of here. So I put this note at open here, or pre-market, whatever you want to say, was the target gap fill at FOMC under GP. The over under right here is obviously just yesterday's high low gold fib that we always do, 560.13. So as this note suggests, and as I have this big thing, and that was the only trade plan I had for the guys and gals, man, it was once FOMC starts, short it down to the gap fill under the GP. That's it. So let's take a peek at that last little bit here at FOMC. So as you see, they had a nice little pop. We had the pre-FOMC sell right here, just snap down. Big consolidation, finally rallied back up just a little bit. And then leading into that FOMC, we finally got that gap fill. And all we needed to be is under the golden pocket of yesterday's high low. So here's that GP. Price action comes in, breaks in, 50 hits it, GP, and she gets stuck. You see this big nasty low right here. You see the rejection of the 100 EMAs. You see the rejection of the VWAP in the purple. You see the rejection of the 200s right here. Everything was holding this guy down with lower high, lower lows on trend. So that is a short entry, right? We said as long as it's under the golden pocket, 560.13 being the center of that golden pocket, you could have shorted into here, risked above the GP, and then obviously profit target, gap fill, as that was our call. So it was a really easy, chintzy call from after hours in this. It was one of those FOMC days where you want to sit and wait, and especially because these giant candles just, progression out of nowhere, big squeezes, and those are news algorithms. When these meetings happen and giant instances get chosen, FOMC, geez, you see it in Trump tweets and Powell tweets. You see Trump tweets and Powell days where you get these just giant irregular candle moves. So it's very hard to trade some of these, and I don't want you guys to get caught up in that. So we end up generally killing off our trades pre FOMC, and that's exactly what we got. So lucky I did kind of step out of this one. I'm not sure how well I would have fared here, but regardless, we locked in about a $3,200 day or so on the top steps, and off we go. Well, if you want to be a part of our community and check any of this stuff out live, it's in the Discord. We got our live stream. It's the first link in the description. If you want to win a Top Step account or just free cold hard cash on Saturday, just leave a sub, a like, and a comment. You are automatically entered, and we draw every Saturday for our 11 a.m. Central class now. We moved it back from a little bit from the noon, get a little earlier in there. And that's that. Hope to see you guys then. Stay tuned for the next. Thanks.